I think the more important sort of question for investors is to think about, well, how has the market really been trading this for a while? And I think there's still some debate around, how the market has been expecting a recession, at some point, right? We've been trading very defensively leading up into this virus, shock, which is what tipped us over into the recession. And so the call that we're trying to make now is just to remind people that we've been sort of in a bear market for a couple of years for the average stock, not all stocks. And many stocks, never made a new high at the end of last year. And we think this has been a giant consolidation. And just to remind folks that bear markets tend to end with a recession. So we think the bear market's ending. We think we've been scaling back into stocks over the last 2 or 3, 4 weeks, and we're not going to catch the bottom exactly. And we think this is probably the best risk reward we've seen for investors in 2 years.
So Mike, a lot of people, of course, are asking the question: have we hit the bottom? Where is the bottom? We've had these two up days now. Folks are looking at the curve, the numbers. Perhaps the numbers in New York may be better. I think there's a real question about that right now. But how do you see it? Do you think a bottom is in?
Well, I think that's not really the right way to think. I mean, that is the right way to think about it, but not in calling it to the day, right? So no one is good enough to call this stuff to the day and to the dollar, and that's not really the point. If you have real assets to put to work, which most of our clients do, you need to be thinking about, is this a good price? Like, do I like this price if I'm investing for the next 6 or 12 months? And we do. We like these prices. We like these prices a lot, particularly in some of the credit markets, particularly in some of the higher quality equity markets, and even some of the lower quality equity markets.
So Mike,